Hey, what's happening, guys? Dan Darrow here with another Options to Play video update. So things are flying around. We are knee deep in earnings, and last week combined with this week, two busiest 5-day stretches of this earnings season. So things are just coming out fast and furious, and it really can be a lot to keep up with all that's going on. So I want to take this video. I want to take the opportunity in this video to just kind of go over Twitter and Expedia. Obviously, right after the earnings, did a write up and talking about the numbers, talking about reaction. But with just like such like heightened volatility in this tape, and these things just having news, it's kind of good to just go over them a little bit more in depth, talk about targets, and just how like the trade's developing just in general. So Twitter is up first, and pretty nice quarter. So basically, what this company needed after last quarter's real shellacking, really needed like a nice solid bounce back print, and for the most part, that's what it got. Right. So users were a little under estimates. But it seems more due to the fact that they're kind of cleaning up the service, getting rid of all like those spam accounts. But earnings beat, revenues beat, real solid, guidance solid. They were looking for about a 4-point move, and you can see that it had about a 4-point move. I mean, it actually traded up almost closer to 5.5 during the session, but it finished up about 4. Went out around 27.5, closed the following day at 31.5, so more or less in line, right? What it accomplished, though, was it got through 30 resistance, right? It got through the 50-day, and now it made like a beeline for the 200-day and it stalled at it. And for the past few days, it's really shown fantastic relative strength. This market has been under pressure. I mean, if you read any headline in the last week, you would have known that. And the fact that Twitter is not only holding on to its earnings gains but actually building on it very steadily is very, very encouraging. And it just kind of reinforces in my mind the fact that once tech and this market firms up, that this really could be like a go-to name again, because that quarter was really what it needed to get people back on board. So in terms of the trade, right, it was going into the print. The trade was strangle. So basically, a longer-term call position, thinking that any sort of rebound could take a while to develop, but it could, as it starts to clear levels, start to build momentum because people will get back on board. Versus on the downside, it was a short-term put position, thinking that if it broke down, it could flush into the low 20s pretty fast. Obviously, it's played out to the upside. Now, like the December 32 to 40 call spread, still have plenty of time. It needs to get through the 200-day, and once it's through the 200-day, it should have a pretty quick move to the first target. And the first target, it's going to be like this 36 area where you have the 100-day. And why that is because like that was the previous high, the previous bounce high, and also kind of lines up well with like the gap. I mean, not exactly price tick for tick, but more or less. 36 is you have like the gap from earnings, and it was the previous bounce high. So once it gets to that area, that'll be like the point where rolling, taking some risk off of the 32 call spread and rolling up would probably be most advisable. So that's what we're watching now. But overall, really very encouraging. Holding on to gains, building a higher base, putting in slightly higher highs like each session. So once through the 200-day. You're looking for a move to 36 and the 100-day, and that'll be like the first target range. Expedia, kind of a similar setup, right? I mean, with so much of the market kind of highly correlated at the moment, kind of a similar setup going into earnings. It rolled over, was hanging out underneath its 200-day. With this one, didn't stagger expiration with this. It was strangled. It was a call spread on the upside and a call spread on the downside. So it was same expiration, call spreads, basically 10 points either direction. And the reason for that was that they were looking for about an 8 an 8 to a 9 point move on Expedia for earnings, but over the last the last 2 quarters, just when it beat, it averaged closer to 12 to 13. And if you go back even further, and you average the big drops in, I mean, it was even more substantial, right? So at 8 to 9 points, the straddle seemed to be slightly underpriced. So that's why we did strangles about 10 points either direction, looking for maybe like a reversion to the average move of anywhere from like 12 to 18. What happened was I had a good number, but just a bad day, and the market got absolutely smoked that session, and it didn't have like a real sizable pop. It was up nicely, but it didn't finish up nicely. But it did get above the 200-day, which you can see, and it closed above it. And now, similar to Twitter, it spent the past 2 days building a base above it, and it's showing really encouraging relative strength in kind of a choppy, weak tape, right? That's really what you want to see. You want to see winners hold on to their gains, gradually making higher highs and building higher bases, and that's what both Twitter and Expedia are doing. Now, with Expedia, don't have the same luxury as Twitter. Twitter, the call position is longer dated, so you can kind of be patient. Expedia, it's a little bit shorter dated, so it's November 16th expiration. I mean, that's still 2 weeks, but it's not enough time where you can just sit back and try to like hit a home run, right? So what I'm watching now is to see, first off, if it can get through 125, which is basically hit on 3 consecutive sessions and not been able to. And if it can get through 125, then you're probably going to get a move to this congestion area around like 126 to 127. And because of the time frame of this trade and the fact that it's kind of stalling out underneath 125, that's probably going to be like the first target area. I would have liked to see 130, but just the nature of the way this is playing out, time frame is a little bit shorter. Market's still a little weak. 126.50 to 127.50 is probably going to be the first target. So once it gets there, looking to cut risk and roll. Depending on when it gets there and what the options look like, either something similar time frame, or maybe even push it out maybe to December. If the market's starting to look better, maybe it wouldn't hurt to have a little bit more time with this and see if you can get a move up into the low 30s. But in terms of like the two setups, Twitter and Expedia, both very encouraging. Just the price action and the kind of a choppy tape, right? Holding on to gains, building a higher base, putting in slightly higher highs. So now both are kind of on watch for that first target range to give an opportunity to cut risk and roll. So lots going on. There was lots going on last night, this morning. Tonight will be a busy one with Facebook. So just like I said, fast and furious. These numbers are coming out. So just expect a lot more action over the next few days. As always, I'd love to hear from you. Please reach out, questions, comments, pass them along. I hope you guys have a fantastic night. Best of luck with the ideas, and I'll talk to you all tomorrow.